Good morning, everybody. Welcome to Benzinga All Access here on December 2nd to wrap out the week on a Friday, the first weekend ending in December. Everybody, we have a little bit of an interesting show today. We had a couple of last-minute cancellations. Everybody's schedule is crazy. We're coming out of the Thanksgiving holiday, heading into that stretch, one of our favorite times of the year here at Benzinga before Christmas and New Year's. We've got a couple of weeks where everybody's schedules are all up in the air. We're traveling around, going to different places. We are prepping on our side for our Benzinga FinTech Awards and our Future of Crypto conference in New York City next week. A lot of our team will be heading out Tuesday morning, getting ready for that. If you don't have tickets, check out the Benzinga Events website. Make sure you're in New York City. It's going to be an amazing 2 days of all the top FinTech players in the industry talking about 2022, as well as all the big players in the crypto industry talking about what's going on in the cryptocurrency world, what happened with FTX the last couple of months, everything that we think is going to happen in 2023, and all the industry leaders giving us their insights for what's going on. So, of course, a busy time. We've got a couple of cancellations. We're going to have a bit of an interesting show mixed in with some pre-recorded content, some really interesting interviews we had earlier this week that we'll be dropping some insights in there. Before we get started, we want to go ahead and roll the All Access intro, then we'll talk about our ticker sponsor, and then we'll jump into the rest of the show. Perfect. Thank you, producer Aaron. All right, as I said, we do want to thank our sponsor, Ticker. They've been with us through every episode of All Access throughout the year. They're how we monetize our channel and how we get these interviews with the CEOs of these companies direct to you for live Q&A, getting the insights about what's going on with their companies, how they're reacting to the markets, and what they're doing in their industries. So we do want to say a huge thank you to Ticker, as always, for making this possible throughout the year. We're going to roll a video for Ticker, show you how to get involved with their platform, what to do to get started with them, and then we'll move into the rest of the show.
What is Ticker? That's right, Ticker with 2 I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Excellent. All right, with that, big thank you as always to Ticker. We're excited to jump into it, even though we do have a bit of a mixture of pre-recorded content, regular live content as always, and some other interviews. We've got a lot coming at you today, and we're going to go ahead and jump right into it. We do have a fresh interview we actually did yesterday because our company had a conflict. Dan Steibel, the CEO of Save Foods, is going to be with us talking about what they're doing in their marketplace, some really interesting things that they think is going to happen with the EU marketplace and the history of foods as we move into a more sustainable culture. So we're going to go ahead and play that pre-recorded interview with Dan Steibel, and we'll be back with a live interview and moving into the rest of the show. And welcome. I'm joined here by Dan Steibel, the CEO of a subsidiary of Save Foods. Dan, it's a pleasure to have you here. Let's go ahead and bring you on and get started.
Hi. Good morning. How are you?
Great to have you here, Dan. Very excited to be able to chat with you this morning. We're actually doing a pre-recorded session of this interview for All Access, so it's great to have you with us. We're able to get a sneak peek and get some questions ahead of time. So give us a quick overview to get started. What exactly do you do?
So Save Food is a company that developed a natural solution to extend the shelf life of fruits and vegetables. And we're doing that by protecting all the fresh produce from diseases. And by doing that, we extend the shelf life, we reduce waste, and we can already say that we we're reducing the waste, by at least 50% on average at the retail level. So very exciting.
Makes a lot of sense. Now, what is so special and different and unique about what you guys do specifically when it comes to the blend of food acids that you have? What makes them so effective and so safe against other options in the marketplace?
Yeah, so the blend of food acid is actually one of the components of our solution, of our treatment. It's combined with an oxidizer, and what it does is actually these oxidizers are very efficient but very unstable. So our blend of food acids is actually, on one hand, stabilizing, I would say, the activity of this oxidizer. And on the other hand, this blend of food acid also, I would say, awake the natural immune system of the fruit. So the fruit now is also starting to fight, is triggering to fight the disease by using by our product. Now, another very interesting that the blend is doing is that we've worked really well with other substance, and that allows us to reduce also significantly the use of all the pesticide, all the chemicals that are used today in the industry to protect today the fruits and vegetables.
Okay, so let's talk a little bit about the management with the company, right? When you're looking at your leadership team, how does it balance the business and the science parts of what you do? Because they're both critically integral, of course, to your business. But how does the management team balance those two sides of everything that you do on a daily basis?
Sure. So on the scientific side, we have the benefit to have on team Dr. Neta Matis, which is a PhD in chemistry. She's an expert with everything related to oxidizers and the blend of food acids. And on the other hand, I'm leading together with her also all the business side. I also have a background in molecular biology and genetics, so the disease and all these pathogens are very familiar to me. So I think this combination of the two of us and all the team that are supporting us with the background also on agriculture and all the experience the team has in that field is really helping us. We also have one of our team in the US was the previous manager of one of the largest post-harvest company in the world. So with a lot of knowledge and contacts, this is really helping us as well.
Outstanding. Okay, great explanation there. And to kind of build off of that point a little bit too, your company's been in a period of transformation over the last year, especially the last 12 months, serious transformation. I want to talk a little bit about the transitioning from R&D to commercialization. Mm-hmm. When you look at the transition overall, how has it been progressing in terms of where you stand as a company, and also how has it been for the team to make that transition as well?
So, as you said, it was a very exciting year because we did this move from the R&D to commercialization, and we have for the last 18 months we have worked really hard to run commercial pilot with a lot of different partners around the globe, and we have also extended the numbers of applications the number of fruits that we are protecting today. So today we are commercial on citrus, on mango, on avocado, on pears, on bell peppers, and on dates. And I believe that by the end of the year we could add to that berries, all type of berries, and also table grapes, and we're working, on more. So the transition was really, having more people moving from R&D to operation, working and traveling to these packing houses that are using the technology. And one of the benefits of the product is that we do not make any change to the workflow in the packing house. That was something very important because it's a very traditional industry. So the transition, moving to a packing house and allowed it to run the product and the treatment and see the benefits of our product have been great. And now, as we speak, we see that the beginning of the season is starting. So more and more of these pilots are turning into paying customers.
Terrific. Okay, and another bigger note from what you guys are doing too, your company just IPO'd this summer. How did that process go for you guys? How did it affect everything else that you're doing? We talked about the transition that you've had from R&D to commercialization over the last year. How did the IPO affect things as a whole, and what differences has it made for the company, if any, so far?
So it's not really an IPO we did in the summer. We mainly did an additional funding round. The company was public. We did a uplist to the NASDAQ in May 2021. That was a follow-up investment that we did during the summer. And so we have quite of experience of being a public company. It's very exciting. It's ups and downs, especially these days where the market are not easy, but we didn't see any impact,
Got it. Understood. Okay, so talking about a conference that you guys just hosted recently, actually, you guys had 100 senior executives from major Latin American agricultural and food companies at your R&D facility in Israel. What does this mean for Save Foods? What came out of this? Were there any major insights that we can look at and pay attention to here?
Yeah, so definitely, it was first a pleasure that these big executives, that by the way, there was a delegation that was led by PepsiCo, in South America. They took all their suppliers to come, and they choose different companies in Israel. From all the companies in Israel, they visited 5 or 6 companies, and we were happy and lucky to be one of them. So for us, it was an amazing opportunity to present safe foods treatment to a large number of partners around Latin America. And we already have a follow-up meeting with Colombia, Mexico, Chile, Peru. It was one opportunity to meet a lot of people and got them very excited. And we see that now we're starting to run pilots resulting from that conference.
And further along that line, too, you actually closed a major deal with Mexican lime exporters just recently here after a successful pilot. And Mexico, of course, one of the largest producers of limes in the world. So when you're talking about an output of almost 3 million tons a year coming from a country with this lime output, what does this mean for the company? What is the significance of this deal that you just closed?
So we're very happy that that we see more and more company joining us on the line. We one of the first customers we have in Mexico is Sicar Farm, which is probably one of the top 3 lime producer in Mexico. And follow up that deal, we see more and more packers joining us. We hope to become an industry leader for lime packers very soon. That's what we see that's going to happen soon. So it's very, very happy with that deal, and we see more and more coming, hopefully in the next coming months.
Terrific. All right, let's talk a little bit about the social consciousness side of things, right? When you talk about the public becoming more aware of chemicals and toxins that are usually so ubiquitous in our food sources and our food supplies, of course, I think this is well known throughout our food industry and everything that we consume almost on a daily basis. How do you see this shifting public policy? Because things are so entrenched now when it comes to the toxins and the issues that we have with our food supply. How is this going to change policy as we move forward?
Also, we see that the policy is already changing, especially now in Europe, where you see that this green initiative, the Farm to Fork initiative, has decided that to move 25% of the production to be organic, but most importantly for us, that to reduce the use of pesticide by 50% until 2030. So it's becoming a huge challenge, especially for all the countries that are exporting to Europe, because they cannot use now a lot of the chemicals that we use to protect the fruit during transportation. So we see definitely, that more and more people are interested to consume healthy fruits and vegetables. And we are happy to see that all the governments are joining that trends, and also the food retailers are promoting themselves to be, residues less or healthier fruits and vegetables. So the trends are started by the people. And we see also now that the government and the regulation is moving to that direction, which is a huge opportunity for us.
Terrific. Okay, I want to talk a little bit about the EU's regulatory environment too. Let's talk about the European Union a little bit. When you talk about them changing their food producers' appetite for clean and eco solutions and keeping their products in play, how does the EU factor into your strategy for growth ahead? How do you think the EU is going to continue to develop on this path of trying to get cleaner foods, more sustainable foods in the future? How do you see that playing out over the next few years?
So we see that especially now already that some of the leading food retailers already are requesting from their supplier to reduce significantly the chemicals that they are using. For them, it's like marketing tools. They're promoting, they're even stricter than the regulation. So we see more and more of these food retailers joining that trend and wanting, to market themselves as having good quality with less pesticide, with less chemicals. And we see that, it's going to grow more and more, not only in the food, on the fruits and vegetables. We see that with meat, we see also that the importance of sustainability, of reducing the carbon footprint, and the fact that safe foods is allowing to reduce the pesticide, allowing to reduce the food waste, has also a huge impact on the carbon footprint of this company. So for us, it's a win-win, and especially for them to use safe food would be a win-win solution to answer all their sustainability or most of their sustainability issues.
Terrific. Okay, really good insights there. Food stabilization, right? How does that fit into the larger fight against climate change, trying to extend the shelf life of these foods and the longer they can last for us in our food cycle? How does that affect climate change and what we're seeing in terms of that fight?
So, the food that is not, as a statistic, almost 50% of the fruits and vegetables that are produced will never reach the plate, and they will end in landfills. Now, all these waste in landfills create greenhouse gas emissions. food waste in general in the world is the third largest greenhouse gas emitter if we compare it as a country. So to be able first to reduce the waste will have a direct impact on these carbon footprint issues. Second, more and more people are populating this world, and we are kind of a food shortage. When on the other hand, we are producing food and 50% of it is not consumed. So to extend the shelf life of produce and allow them to be consumed, we get to a balance where maybe we don't need to produce more food. We just need to consume what we are already producing and not send 50% to the waste.
Got it. No, another really good insight there too. Let's also talk about some things that you kind of may have a hot take on for your industry specifically, right? When it comes down to Save Foods, is the U.S. going to be moving towards a zero tolerance policy for pesticide residue? If so, how long until that's going to be the case? This is obviously a major topic for everybody in your industry, and certainly I'm sure you have an opinion on this. But moving towards a zero tolerance policy, pesticide residue, will that take a long time, and is it even feasible in the near or long term future?
Well, first, I think it's feasible. It's definitely something we need, that every country needs to trip to that direction. It's definitely something that is important for the health of their population. Studies show that the impact of pesticide on the health of people is important, and consuming organic is not just I would say a word. It definitely has an impact on our life and on the health of people. Regarding the US, I'm sure it's everyone is talking about it. It's going to take time, but at the end, I believe that in the next 5 to 10 years, everyone will actually move to that direction. So it might take a little bit of time, but the US will join as well. It's actually already starting to join with limiting the use of some pesticide that I use today. I believe that with the pressure from the people, it will be even bigger and might be faster.
Excellent. Okay, now I want to bring up your deck here for a few minutes too. If there's any specific slides that you want to go to provide some more context about Save, that'd be great. We can pull to any of those specific ones. Really up to you.
Yeah, I think I think that the picture can speak better than words. So I think this slide exactly is the slide where it's pictures that we receive from our commercial partners running some of our pilots. I'm happy to say that for avocado, mango, citrus, pears, it's already commercial. For the others, it's on the way. And you can see on the top, these are the fruits that are being treated with Save Foods solution. And on the bottom are the fruit that are as they treated today. And you can see and you can appreciate, I believe, the difference in quality and in freshness. So, that's what we're doing. We're happy to provide to the people very fresh, high quality fruits and vegetables, and we hope to continue to do that in the near future.
Fantastic. Okay, so let's talk a little bit about future growth, right? Is there anything in specific that you guys are looking forward to growing over the next year or the next several years as a company? Any big priorities for Keystone growth that we should be looking for as investors?
So definitely now we're moving to translate all the pilots we've been performing to paying customers. So that's definitely something you will see in the next 12 to 18 months. Next, we will definitely, we're looking to add new product and new technology to our portfolio to be able to increase our footprint in all these packing house that we are currently working with. So this is, two very important milestones that we expect to get in the next 18 to 24 months.
Okay, so anything else about Save Foods or maybe the industry that you're in that you think retail investors may not know enough about? For instance, when you're looking at your industry as an investor and considering what companies you want to be involved with, what companies you want to follow on a daily basis, what are some things about your industry you think that aren't widely known that investors should be aware of when they're making their decisions about who to be involved with and who to follow on a daily basis?
So I think, Save Foods is definitely coming in a point in time where, as I told you, the regulation, especially in Europe, has changed, and all the packers, especially in Latin America, South Africa, and even in the Middle East, that are shipping their product to Europe, even from the US, shipping to Europe, have to significantly reduce the use of this pesticide, and especially today with the transportation time that is significantly increased, they're facing significant waste. Now, each waste, bad quality product at arrival has a very bad impact on this company. Now, it's agriculture, and that's what I want my message to these retail investors. It takes time, unfortunately, because we're dealing with fruits and vegetables. We're working very hard, to be able to treat fruit all year round, and that's where we are addressing not only the North Hemisphere but also the South Hemisphere, so we won't have any impact on the season. But we're doing that. We see that these packers are very excited about our product. They're very excited about the results. And it's moving on, and we see that it's happening. So be patient. Safe Food is definitely a company that's going to make a huge change to the food industry, and I believe also to our health, because we are able to provide more food and also more healthy food. So thank you very much, and I hope you will continue to support us.
Oh, absolutely. It's a great message to investors. Obviously, before we go and we let you get back to the rest of your day, and we're really looking forward to getting this in front of investors on All Access, anything else that you want investors to know for the rest of this year? Obviously, December is going to be a busy month for everybody, but anything you want investors to know about the close of the year for Save Foods that's going to be significant?
Yeah, so we see already now that we are, moving, we are increasing the number, or we are on a way to increase the numbers, hopefully to increase the number of clients, paying customers that we're going to have, and we hope that this year's will be a good improvement, and we're working hard to continue to do that in the next few quarters.
Fantastic. Dan, it's been an absolute pleasure having you with us today. Thank you for joining us ahead of time for All Access, getting in so we can get some insights directly from you about what Save Foods is working on. It's been a pleasure having you here. Can't wait to talk again soon.
Thank you very much, Michael, for your time, and looking forward to speaking to you again.
Let's dive right in and learn a little bit more about you and the company. What does Onfolio do?
We buy online businesses, and we manage them, and we run them. The businesses are already profitable. So we go out, we find already profitable businesses where the founder of the business is looking to get an exit, and we take them over and grow them as much as we can.
Fantastic. Okay, so that's going to be my first question for you, right, is talking a little bit more about what exactly you guys do. Your business relies on acquisitions, right? So what is the competitive advantage for you guys relying on acquisitions of companies that are already profitable? What are some of the ins and outs of what makes this such a successful approach for Onfolio?
Yeah, there's a lot of different things there. I think fundamentally it's our ability to identify businesses where the founder has not fully maximized the organic growth opportunities, but also the size of these businesses is typically in the $1 to $5 million valuation range, and at that size we might be paying something like 4 times EBITDA or adjusted EBITDA in many cases. So that means that right off the bat it's already a very lucrative acquisition for us, and then couple that with the fact that the founder hasn't optimized the business in all the best ways possible, that gives us the opportunity to grow that as well and enhance the lucrative nature of it even further.
Terrific. Okay, so let's dive in a little bit more detail, right? When you're looking at these companies that are profitable, of course, there's got to be other factors that go into your decision-making process of who you're going to acquire. So what things stand out to you in that process of deciding which companies you're going to pick up and which companies would be a right fit for Onfolio?
Great question. So I mentioned already, but first of all, yeah, they're all online businesses. That's a very broad term, right? So it could be a software, it could be e-commerce, could be an agency. And we're agnostic to the business model, but what we want to see is it needs to be a business that's growing. It's not in an industry that's going to come under threat. It's got either a strong product or it's got a strong service. Ideally, it has recurring revenue with low churn. It has, as I mentioned a few times, the ability for us to come in and grow it. So a lot of the businesses we look at, they've been built from the ground up by a single founder or a couple of founders, and those people are usually strong in one area. So maybe they're good at media buying. Maybe they're good at sales, maybe they're good at operations, but they're rarely good at everything. And as a team, we are experienced in everything, so we have that ability to just kind of follow our own best practices and grow it. In addition, I would say it's a business with consistent revenues as well. It's not just kind of lumpy, and as predictable as possible.
Excellent. Okay, and before we talk about some recent news, some recent acquisitions, and what's going on with you guys as of now, and kind of talk about the current state of things, I want to ask one more question about the process here, right? After you've acquired a company, after it's come into your portfolio, what happens to the management team? Is there anything else that happens right away with the company? What does that kind of process look like after an acquisition has been made?
Mm-hmm. Yeah, I mean, there's a big "it depends on the business" answer there. Again, the vast majority of the time, they're being sold by a single founder or founding team, and typically they don't want to stay. But the management of the team, so the operations, the sales, whatever it is, depending on the business, developer, and so on, they're usually happy to stay, and they're usually quite excited about being bought by a public company as well. So our job really then is to replace the founder, to install our own CEO, and just try not to rock the boat as much as possible.
Terrific. Okay, so let's start talking about some recent news. Let's talk about what you guys are up to right now. The most recent acquisition for Onfolio was of two sites. They're collectively known as BPWS. Take us through the purchase and the details a little bit about this. Why BPWS? What did the process look like from identification through closing the deal? How did this kind of come together? And what does it mean for Onfolio right now? What's impacting the business as of the acquisition of BPWS?
Sure. So BPWS is two sites. It's actually two WordPress plugins. WordPress is a content management system for a lot of, like, I think something like 30% of the web is built on WordPress. So it's it's the software you would use if you want to build a website. And kind of like the way apps have, iPhones have apps, WordPress has plugins that people create as add-ons. And the two that we bought are related to. One is a security plugin. It helps people upload files to their website and put them behind a password protected area, that kind of thing. And the other one is more about preventing people being able to directly log into your site. So they're both security related, and they're paid plugins. They have very low churn, very predictable revenue. They're pretty capital light. You just need a small development team to make sure you can keep them updated. And so why we like them is because as a standalone business, they're good because of all those traits, but we also are quite bullish on the notion of acquiring more WordPress plugins or something that has subscription elements to it. And BWS was a good first acquisition for that we can build a team around and add other plugins in and other divisions over time.
Excellent. Okay, makes a lot of sense. Great insights there. And aside from just the functions of the business and what you guys are up to right now, you guys went public later this summer or this year in 2022. What was that process like? But more importantly, how did everything come to be? And what does this mean for the company's future too, right? What advantages are going to come out of being a public company as Onfolio doing what you're doing?
Yeah, so we completed the IPO August of this year. I think we closed August 30th. And it was a long process, obviously, with the macro environment we've had this year. The equity markets haven't been great, so that probably set us back a few months, definitely. In terms of what it means, well, we raised about 12 million net in the IPO, and that's given us a lot of capital that we can deploy. So since the IPO, we've deployed around 4.5 million. So BWS was one acquisition. We've also made two others. And so we have, maybe 5 or 6 million left to deploy, depending how much we want to keep as working capital. So, yeah, so it's basically the IPO has given us the capital that we needed in order to actually do our business plan. In terms of the advantages of being public, there's a lot, and I don't think there's any single one kind of reason a company goes public. For us, the ability to attract talent is a huge one. The ability to win deals versus other buyers is a good one. as a public company, you have a few other capital, like sources of capital, such as your stock. If your stock's trading at a premium, you can. It's a lot easier to do things like buybacks, which are again further down the road for us, but a good capital allocation decision. And you also have the increased visibility. Since we've gone public, we've had significantly larger deal flow come our way, not in terms of the larger businesses, because we want to kind of stay in that 1 to 5 million range in terms of the quality and quantity of deal flow. And there's many other intangible benefits that I'm struggling to think of right now. But yeah, basically, we could have stayed private, but everything in our business model just works better if we're public.
100%. No, it makes a lot of sense. And so when you're talking about some of the benefits of going public, let's also talk a little bit about recent financials, right? And what's going on in the business side of the company. So obviously a crazy couple of years as far as inflation with what's going on with the macro environment right now. We'll talk about all of that a little bit more in detail and kind of get your perspective on the market shortly. But I want to talk a little bit about Onfolio specifically. There's a 10% decrease in revenue for the quarter if we look at year over year. Is that transitory, or do you feel like there are any specific drivers that have led to that? Do you see a path forward from this, and what are you guys going to do to address the revenues moving forward from here?
Yeah, I mean, it's transitory, and it's also kind of deliberate. So as we were getting ready to IPO, we let go of some of a little bit of backstory on Onfolio. Before we started making our own acquisitions, we were a service provider. We were working with individual wealthy individuals who wanted to acquire online businesses for themselves, and we were charging them management fees and profit shares. And as we were preparing for the IPO, which is basically most of 2022, we let a lot of those clients go because it just wasn't going to be a core focus of us. We also, one of our largest businesses had a very good Q3 last year and an okay Q3 this year. And because we just had that one business, if it does a little bit worse, then that actually affected our Q3 financials quite significantly. Whereas, everything post IPO, we've made 3 new acquisitions. The revenue of one of those acquisitions alone last year was double our entire revenue the year before. So our revenue moving forward is going to be significantly higher anyway. So maybe even if that one individual business unit carries on at the new level, it's not going to make a huge impact to our journey and our trajectory.
Got it. Okay, great insights there. Thank you for that. You also started Human Proof Designs in 2013. How has the landscape changed for those looking to start an online business in the last 10 years? It's a very interesting kind of sector here. Can you take us through some of the development of this and also what the path forward for it looks like as we go into the next couple of years?
Yeah, that's a great question. I think the landscape's changed. In many ways, the fundamentals have stayed the same. Online business still works the same as it used to. Sure, you get things like Facebook ads don't work as effectively as they did since the Apple iOS update. You get these kind of individual tactics and so on come and go. But fundamentally, online business still works great. More and more people are joining the internet every day. Believe it or not, there's still the world's growing, so more people are joining. Since 2013, I would say in many ways it's easier because there's so much more training. There's so many people out there teaching you how to build an online business. So it's a lot easier to learn, but that also creates more competition. So I would say it's easier to learn, it's easier to get good, but if you're kind of mediocre, it's not as easy to make money as it used to be. So yeah, like as long as you work at it and you look at it as an ongoing practice and you're going to try and improve and consume as much content as you can, and you kind of identify what's a good business for you. So for example, I shouldn't start a software business because I'm not as good at software as I am at, say, content or e-commerce or paid media and things like that, but somebody else would be fantastic in software. So I think knowing what is a good business for you and just kind of working as hard as you can to get good at it, then the opportunity is definitely there.
Sense. Really insightful. And I want to hit on a key point that you had there in just a second. But before we get too far into it, we also have your investor deck pulled up. I want to get into that. Any key specific slides that you want to pull up, just let us know. But we'll go ahead and get it up on the screen here. Anything that you want to reference or anything that you would pull out for investors?
I think some of the earlier slides, I think slide 3 or 4 is, so the next slide after this one is like strategy overview. So really, if I had to give a kind of elevator pitch for Onfolio, it's that we acquire and we operate already profitable digital brands. We then raise capital, non-dilutive, so debt, preferred shares, that kind of thing. And as well as our retained earnings, we take that raised capital to just kind of rinse and repeat and acquire more businesses. And then we have this intentional growth strategy through M&A. So it's very much buy online businesses, cash flow them, rinse and repeat, augment that with that, and that's it in a nutshell.
Excellent. Okay, great. We kind of got the strategy overview there, which is kind of what we touched on at the beginning, but it's always helpful having that visual aid to kind of give us deeper insights, right? So anything else that we want to pull to as we're going, totally fine. But I did have a question too. If you're looking at the markets overall, again, like I mentioned, a crazy last couple of years, what do you think are going to be some of the keys to success for small online businesses over the next 10 years? How is that landscape going to change? If I'm sure as it will in many ways, but what are some of the key growth drivers going to have to be for these smaller online businesses that may become acquisition targets for Onfolio?
I think optionality and adaptability. It's probably always been the case. Like, you might start an online business with an intention to be business doing this or in this industry or this business model, and then you kind of have to pivot and adapt. So going all in on one particular business model may not be the best. So for example, the Amazon FBA model, where you start a brand, basically you import products from China, ship them to Amazon, Amazon sells them to their customers. That's your business model. That business model can work, but in 2017, it was like the thing everybody wanted to do. Whereas in 2022, a lot of people are like, well, you don't want to rest all your laurels on Amazon. You should get off Amazon. Maybe you should get a Shopify store as well. So you need to have that ability to adapt, because the internet's changing very quickly, and a lot of the gatekeepers like Google, Apple, Facebook, they will keep changing the rules very quickly as well. So that's really it. As long as you have those skills like tenacity, adaptability, and you have a business with the optionality to be adaptable, I think no matter where you are, then you'll be okay.
Absolutely. Okay, and let's take that one step further, right? As we start to wind down here, we talked about some of the macro factors that have been affecting everything. And during all of these interviews, we certainly want to learn about the companies and what you guys do and what you look for in terms of successful businesses, especially for somebody like Onfolio, where the factors that a company is putting into their business determine if they're going to be acquisition targets for you. But we also like to get the insights from you guys about how you feel the markets are progressing. What does the macro global environment look like? And how are things like interest rates and inflation going to affect businesses as a whole, no matter what the sector or industry is? So as you're looking at the future here, do you feel like the looming recession will affect smaller businesses? Do you think that entrepreneurs and people who are growing these smaller companies are going to have to adapt and grow? And what do you see as being some of the biggest threats on our horizon, but maybe some of the opportunities that come along with a more challenging economic environment as well?
So much to unpack there. It's really going to depend on the business. So, for example, marketing agencies might find that clients are going to start tightening the purse strings. The marketing budget is often the first thing you cut, which is kind of silly, because the marketing budget is what really drives your business. And if all your competitors are also cutting their marketing budget, maybe you should spend more. But marketing agencies, maybe they should think about other ways that they can reduce their payroll if their revenue goes down as well, just things like that. But then there's going to be other businesses. Things that always do well in a recession are like how to make money online or how to get a remote job. Those kinds of businesses are probably going to do well. So there's those factors as well. And then things like, a year ago, I'd have said one of the biggest risks is supply chain for e-commerce businesses. I think the supply chain is kind of in a better position now than it was. Certainly the cost of shipping has gone down. But the economy is kind of in a weird place right now, where we just had the jobs report where jobs grew and everyone was kind of like, oh, that was unexpected. But then at the same time, all the tech companies are laying off tens of thousands of people left, right, and center. Is that factored into the jobs report? Things like that. So we're kind of in this weird place where the recession's looming, but also there's still a chance that we avoid one. And I think basically everybody should just plan for the worst and assume, maybe their revenues are going to drop, and make themselves okay with that, and then whatever happens, you're going to be okay. In terms of opportunities, yeah, I mean, if all your competitors are reducing their marketing budget, that's an opportunity for you to double down. For us, there's going to be a lot of juicier acquisition opportunities, I think, where sellers are either panicking and more willing to sell, or they're in a position where they need to sell their business. Maybe it's their side hustle and they've just been laid off and they need the cash. Or maybe it's going to just have a short-term trouble. We view, we take the long view, so we're okay buying a business that's a little bit depressed because it's going to be transitory or something like that.
Makes a ton of sense. Really great insights there. And a final question to kind of build on that before we close out here. Coming into the end of the year, let's take a quick look ahead at the rest of December, the holiday season especially, right? Always a busy time for e-commerce businesses. Is there anything that you think may help you guys determine some new targets with companies that are going to have big holiday shopping seasons? Anything that you're looking for in December here for companies that are going to have particular strength, building off all the momentum with holiday shopping and everything else? Anything that you look for over this month?
Really, it's got to be like a year-on-year thing. So typically businesses that do really well in the holiday season, they might not do that well for the rest of the year if they're a seasonal business. So we probably wouldn't want to buy something that right now that just does well in the holiday season. So we would also be looking at what does it do for the rest of the year. If it makes like 50-60% of its revenue in November, December, then maybe we would avoid it. So yeah, you kind of have to zoom out a little bit and see is a successful shopping season masking problems with the business rather than being a sign of a good business.
Terrific. Dominic, it's been wonderful getting some market insights from you, some strategy into how you guys think and how you evaluate companies, but also just how Onfolio functions and how you run this company. It's been an absolute pleasure speaking with you. I'm sure we're going to get to do it again soon. Dominic Wells, CEO of Onfolio Holdings, thank you so much for joining us.
Yeah, thanks for having me. It's been great.
It's been a pleasure. Dominic Wells there from Onfolio Holdings joining us. They acquire digital businesses and acquire a portfolio. Really interesting market insights and some other stuff about how they function and how they run as a company, what they're looking for in targets. Great conversation there. We'll have access to all of that, of course, in post-editorial coverage from this. We do have a gap before our next live speaker, though. So moving into the next part of the show, I believe, unless I'm mistaken, we're going to bring on Mitchell Hotch. And we're also going to bring on Zunaid. I'm hoping he's with us as well. We're going to go ahead and bring on some of our live traders and go ahead and get them into the studio until our next live speaker and keep things moving. What's up, guys?
What's
How are
up?
ya?
What's up? Good. How's it going?
We are good. Just had a really good interview, actually. One of the more interesting ones I think we've had in the last couple of weeks. Onfolio Holdings. We got to talk about the holiday shopping season a little bit there at the end, which is something I was really excited to talk about. So good stuff. It's interesting. What's going on with you, fellas?
I mean, their business is probably booming because all the shopping you're doing.
Right.
Listen,
that's where the billions came from. I saw those numbers hit.
I try and control myself. I controlled myself during Black Friday this year, which is rare. Unlike Aaron Thomas, who stocked up on golfing apparel, I controlled myself.
Wow.
Mostly because I was sleeping a lot, but I'll take what I can get, right? Doesn't matter.
I love it.
All right. Let's
All right, boys,
maybe
take it
some
away.
Market action. We'll let you hop out of here. We'll see you in a little bit. Let's get towards the market action. How you doing today, Zane?
Good, man. Aaron texted me. He's like, yo, you available? I'm like, bro, I just woke up. I'm like, today's the day off, bro. I just woke up.
Wow.
No, man, but I've been good. Just here, I'm about to actually, let me share my screen as soon as I get into this trade.
Yeah, I'm already in one, so I'll give mine.
Well, you
right
go ahead.
quick.
Yeah.
I got you. I got X here. I did steal on the pullback here. SPY is holding the VWAP now, so that's looking interesting if we can get back above 404 here. But I got X on that VWAP pullback there. Looking for it to keep going. You guys know how I like X. It's right now at the high. Sold a little bit already, about 50%, right when we got near that high of the day. Now I'm looking for it to continue through 2675. Another one that I was looking at was like LAC. some lithium plays today, but energy has actually been pushing up today also. So you could take a look at some oil names. They don't want to go away, and OPEC is going to be talking this weekend. They could be they're doing a meeting on Sunday to decide the next phase of production policy. Who knows? By Monday, we could have oil cuts that are coming, and that could spike some oil futures. We'll have to wait and see, but it's definitely going to be out there. So Zunaid, Sunday night, you might have to be a degenerate in the futures action.
So let's talk about being a degenerate. All right. Well, I'll talk about it after you're done. If you're done with your trade. So last night I was trading, and I was doing some other Benzinga stuff, and I went ahead and went long the SPY right on this break of VWAP here, and then I went ahead and like sold majority of my contracts, but I still had 2 remaining. I didn't realize I had 2 remaining till what I do is just a little fun fact, I guess, is at the end of every month, I calculate like my P&L, my net worth, and this, that, the other. And I go into my E-Trade account to calculate what my account size is or whatever. And I'm like, why do I have a SPY position open? Because I'm usually 99.9% cash at the end of every single day. And I realized I had calls still open. I'm like, oh, whatever. We'll be all right. I might lose, $100 here and there, whatever. Wake up this morning and I see this. I'm like, oh, okay. That went down real quick. So I woke up woke up to a $500 loss just to start off the day, which wasn't fun.
Don't worry.
But thankfully, we made a little bit back when I went ahead and shorted Google off of the $100 level here. When we shorted Microsoft off the 151. But I did give a little bit back when I tried to short Baba off of this level here, which was the previous high that I had from a couple of days ago. But in terms of what trades I'm on today, yes, I am short 2 contracts here on the E-mini on the micro side of things. I'm short at 40.39.75. I'm looking to lock in some gains around 40.27.75 if I can. And then my stop loss is going to be about 40.51.75s to the highs. Ideally, I would like to maybe, and it's crazy because you're going to get some good swing opportunities in the sense of like the prices are moving, even 1 or 2 contracts, you can go ahead and get a solid momentum out of it because of how much we've dropped. So things are a bit more volatile now, if you will. Something to keep in mind. Let me see if I get stopped out of my NVIDIA trade. Okay, no, I haven't yet. So I'm also short NVIDIA here via contracts. Let me tell you all the contracts. I am short because I bought the puts. I bought the 165 puts expiring this week. My average price on those are 114. I went short because you can see the drop that you have here, touched VWAP, couldn't get over it. So we're short on the equity side as well. Just 50 shares on that. Let me go ahead and switch my account over to that. There it is. So actually, nope, just short 25. We went ahead and covered some earlier on this drop, I guess. So I'm going to go ahead and close out of that whenever we get over to the 163.82 area. But mainly it's the puts that I've got here. And then let's see what else we're kind of keeping an eye on. Mainly it's just the, where'd it go? The futures trade for me. Let me go ahead and switch accounts. I wish everything was just one account. It's not. That's fine. But yeah, we're about $50 in the money. So, we'll wait for it though, because we want to have a good risk reward trade. I do want to have it come down here. And then hopefully we can go ahead and test this trend line eventually down here. That would be actually really great. Let me extend this crayon drawing of mine. There we go. But we'll see if we can go ahead and get a flush or if the market wants to come back above VWAP. Because for me, it's got to get over this 40.50 area, but not quite sure if that's going to happen or not. Anything you're seeing out there?
Yeah, I mean, I'm looking around. I mean, I see energy bouncing in basic materials and steel. I'm going to see what happens with that. They pull back a little bit there, but just still battling. I'm deep into the green. I've already taken a good amount of profit. So just looking for that to push. I did make a mistake earlier today on freaking Tesla. I had a swing on overnight and it was looking good until, the SPY got hit. Yeah. But what happened there was I had set a stop like underneath, like I usually sometimes when I can't watch positions, I put like a stop that's like far away, but to a level that I don't think it's going down there, that intraday action, right? Kind of what I call a protective stop. Not really a stop that I'm looking at like levels, but more protective. And then this morning, right before the bell, I had to deal with some kind of work stuff, and this is going to happen. So we can always learn from it, right? So in this morning, I forgot to take off that stop order. And as soon as the market opens, it closed me on Tesla and the stock rips $2 above my average price.
$2? That's man. What are you going to do now though?
I can't do. I already stopped me out. I
Oh,
lost.
like
I
you're gonna
took
try
a
to get back
loss on
in,
the
or did it already
position.
move?
No, because the order immediately hit because it was
Oh.
underneath that stop price, and I left it there because I was dealing with some work stuff in the background. And I'm like, well, I can get to the market a minute late. It's okay. The market can wait a second. Well, little did I know, the market wasn't waiting a second.
No, dude,
It
that's
said,
tough.
"Shapow! Here you go. Here's what your loss." And then watch Tesla go up $2.
That's
Oh
unfortunate.
man,
Oh,
that's
real
how it is
quick,
sometimes.
you've got some options coming into PDT now. These are in the money, so it may not be as sexy, if you will. But you've got the $83 calls coming in on the ask, expiring next week on the 9th of December, approximately $1 million worth. So keep an eye on PDD, excuse me. PDT is an issue that I had run with in the past. But yeah, I'm just short. I'm just long, excuse me, 50 shares here with a stop loss of 86.62. I don't want to give it all the way to VWAP, which, you know, I probably should, but now I'm at break even on those. But yeah, just a heads up, $1 million trade. And they actually were coming into BABA's as well. The $100 call is expiring next week. So if BABA bases here, I was hoping it would come back to around the 89.67s. But if BABA bases around 90, I think you have a good risk reward. Maybe VWAP cut of, you go ahead and take your risk off. But if you like living life on the edge and you like sweating at night, maybe some BABA calls to the upside could be your cup of tea. I wouldn't do it. But just telling you what I'm seeing out there, and you can see if that's worth your risk appetite. If we go on the 65-minute, well, that's the last time BABA was anywhere near 100. It was all the way back in August. I guess it wasn't that bad. Maybe about a couple of months ago here. But that's what we're seeing in the options world. Let's come back to me getting almost stopped out. Here, let's go ahead and switch accounts. So we were in the money by 50 bucks. ADM, here, I'll put you up.
Yep. I got you. I'll put it up on the left-hand side here. This is Archer Daniel Midlands. It's been beaten down yesterday. I'm seeing the SPY starting to push a little bit, so I'm taking a little bit of a shot here. Just got a little bit of an entry there at 91.18s, so definitely a little bit higher here. Doesn't even show it on this chart. That's how high I got it up there. Definitely caught it a little bit higher right now. We'll see if we're able to get it pushed. Big thing for me is it just holding 91 here and then getting back above towards 91.50s. We'll see if we get that lift or not.
Kind of want to de-risk my futures contracts here. I'm trying to see if I should or not.
X still working for me. I'm going to look to see that continue through the 26.80s here, and then I'll look to take some as it goes to 27. Right before that, I do want to take some profit, take majority of the trade off on X. Is X trying to give it to me?
Man, my NVIDIA contracts were up about 10%. Now they're down about 3%. You got to love Lotto Fridays.
How's the SPY? SPY's battling to hold the VWAP today. Has done about 2 or 3 different cuts there on like a 5-minute below the VWAP. That looks good now to take through 404. I'm starting to look to the market towards the bullish upside now. Let's see if we can get that really break through 404. A clean close above 404 on the 5-minute would look good. We'll see if we can get it.
Let's see what's going on with a bit of Netflix here if we can. Netflix is just continuing to move towards. Okay, so now look, here's what's interesting about Netflix. If Netflix goes ahead and breaks 320, I think you can get a continued move to the upside, especially if the market goes ahead and participates or at least goes sideways. But you can see resistance all across yesterday's trading session at that 320. So now if we go ahead and break this 320, you can possibly see a move a little bit higher. Let's see if there's any options coming in that interest us on Netflix. You give me a little bit more confirmation bias. Looks like you're getting the 320 calls coming in on the ask. About maybe $50,000 to $100,000 worth. Nothing too crazy for a ticker like NFLX. Coming back to the futures here. They're above VWAP. I should have taken my L earlier, but I'm
not liking this
stubborn.
ADM. I'm out of ADM there. It looks like it's going to hold the 91, but looks like the 91 is definitely not holding there. 91 on 90 is holding there. So we'll just see. It looked like it could crack there. Not going to hang out there. X is working so well for me. I'd rather cut this loser really quickly than get out of X there. So I'm looking to go ahead and just continue pushing on X here as it looks to continue towards 26.87. Can we get it to 27?
Looks like I just went ahead and got filled on my one more contract that I'm short on the futures. This will end up being an awful trade for me, but I like my risk reward all the way up here. My stop loss is going to be 40, 51, 75. Come on back down. Come on back down.
Solar Edge, here we go, says Easy Mike. There you go. You guys are looking at that. I see now sitting on a BlackRock reversal, maybe. No, that doesn't look too bad. Here's 92s here for X. I'm going to go ahead and take majority of it out here, leave the last little bit of running. Took some out there at 93, looking for the rest to run through 27 and then take the rest off of there. It's been a really good trade for me, at least on X. Happy I just cut that ADM a little short, but it could still get into the green. There's a nice little push on X. Now we're at 26.98. Can we get the break above 27? There's 27. Come on. Little lift from there. It's using it as resistance right now. Starting to see it slow down on the action. 27.02. Let's take it. I'm out there. Boom, all out of X.
I'm out of my NVIDIA as that one's popped above. Held the trend line. Got too cute with it.
Nice little move. Breakout there on X. Took the profits onto the push. X gonna give it to you. It gonna give it to you. It's funny. I actually had a member write to me and was telling me that they saw X on a nice daily outlook. And it actually got me to start looking at X. I didn't take a trade yesterday, and this was a day prior to yesterday that he told me that. But that's how we can always help each other, right? I'm not necessarily going off his levels. I'm making my own trading decision. But he just put the warning sign out there. Hey, I can see this as kind of positive right now, bullish. Can you take a look? Well, didn't tell him how to trade it, but it definitely put it on the radar for me and was able to nail an X trade. That's how we can always help each other out there, chat. That's what it's all about.
You've got Netflix. I did go ahead and pop above 320. Now I'm looking to go ahead and let me see if I can get some lottos here. Looks like I did just get into 25 shares of Netflix, but I want to get some lottos, so I want to go ahead and come back here. Come on.
With a nice breakout. I like that one earlier. I mentioned it. Look at this move on the left-hand side. LAC with a nice little breakout there. Lithium name. Good little push.
I went ahead and got into some 322.50 calls on Netflix expiring today. I got filled at 174.
Ooh, I should scalp Disney with it. I was looking for that Disney move with that Netflix move. Remember, we talked about that earlier in the week. Netflix making a move up. I like Disney today. Starting to push already. It's gotten there to 98.46. I'll have to look for a pullback already, but it is getting some lift.
So if we go ahead and take a look at Netflix here, we've got a gap that we're in the middle of filling, and that gap would fill around the 330.91 area. So yeah, let's go Netflix.
That's what I'd like to see, man. Yeah, I've been looking for the 300 hold on Netflix. You finally got through it, right? And now it's important to just hold it on pullbacks. Yesterday, what do? You cut below it and close above it. You're looking good now.
All right, the contracts that we bought on Netflix at 322.50 calls, I went ahead and sold half my size here at 215. We got in at 179, out at 215, looking for a little bit more of a push if we can get it towards 223s and then maybe a little bit more to the upside. So I've got 2 contracts left that I'm going to sell here at 250. I'm going to go ahead and put that order in there, the limit order, in case I forget. All right, 250 is going to be my next out. And then after that, I'll probably look to sell at around $3.
Just happy I had that good trade on X to bounce me back from that swing loss there on Tesla. But we'll see right now. SEDG definitely pushing, EMPH pushing, solar stocks not turning around right now. Halliburton strong. That means energy strong right now. Basic materials leading us right now. So you guys can take a look there. We always take a look at coal names there. Some coal names, BTU continuing, right? We talked about that plenty of times. It's above the 30s, continued on the daily trend now, holding those 30s as pullbacks. That's going to be the level to watch. Let's see if it can continue back towards the high from the 30th. All right, X pulling back there a little bit. Overall market looks like we got that push right through that 404. Now we're looking for 404s to hold as pullbacks. Maybe it can even come to 403.80s, but I wouldn't want to see, let's say, like 403.50s here on the pullback. Want to hold here around the 404 mark and continue the trend up, climbing the wall of the worry on the pullback that we got this morning.
Of course, don't forget that on Netflix here, let's go back to it. It popped above, came right back down. Now it's kind of holding that 320 area. You'll love to see that. And now we need to see a continuation to the upside and have it make higher highs and session highs here shortly. The contracts that we bought are only up about 7%, but good thing we sold half of them at around 20% gains.
All right, taking a look at like MOS. I know it was earlier pulling back. Look to see if it can get back above the VWAP. It's still pulling back strong right now, so I'm leaving that alone. Lithium names looked good, but I wasn't able to jump on any of those. Thinking about MP here. MP doesn't look too bad on the pullback. Just looking around, team. What do you guys see out there? Let me catch you guys in the chat there. Looks like Sydney's taking a look at TAN, solar holdings going up. All right, so that's not a bad ETF to look at, right? When solar is making a move. Yeah, TAN holding up. Looks like there's some daily levels to start getting through. 83, 84. Doesn't look too bad there. Portugal just scored 1-0. You don't want to hear me yell goal. Trust me. Oh, man, we'll see what happens. I'm rooting for Portugal, that's for sure. We'll see what happens there. China names looking perky, says Jay.
Portugal's already through, right?
I think they just need to tie or not lose, but I don't know. I haven't really kept up too close with Portugal. There's so many teams I'm keeping up with. It's kind of hard.
Gotcha.
I'll tell you the truth. I keep up with a lot. I like the World Cup. I watch multiple teams. It's not like I just watch one team. You know how some people just like, focus on one team. I'm enjoying it. Yes, USA. I think USA, yes. You know what the funny part is? Easy out. I was about to tell you, USA plays on Saturday.
They play tomorrow, yeah.
That is tomorrow, Mitch. It's been a long week this week, man. I'll tell you that much.
Yeah, USA plays tomorrow.
SPY pulling back towards that 403.80 area that I talked about. I wanted to hold right there, not 403.50s. If the bulls want to hold it here, we really just want to rise it up right back through the 404. You can see the 404 hit right back through. We went back to 403.80s. Now we're back to 404s. Let's look for it to kind of get that next push. Another thing that I'm seeing is lower volume on this push. So if we're going to really get the push, we need some volume to really come through, pushing us through, let's say, like the 405 on the next push up.
Netflix trying to hold on.
How's our big leader stocks? Apple, Amazon. Ooh, Amazon looks like it's dragging a little bit. Google looks like the strongest out of the three between Apple, Google, and let me look at Microsoft. I haven't taken a look at that one today. Yeah, Microsoft not looking too bad there. I'll show you guys Microsoft here on the left-hand side. But Microsoft getting a little bit of a lift there. We'll look to see if it can continue pushing on the day. Let's go to the 15-minute. You can see how it's coming back. Nice little push there. Amazon looks like the weakest one of these bigger names. You can see how it's pulling back there. Apple looks like it's just hanging out right now. Google not looking too bad on the upside, but we'll look for these to see if they can continue pushing. You can see on like the 5-minute, they've had a couple of runs. Will the SPY turn around though? It's battling right now between the 404s.
Oh, shit. Fuck.
Going to the SPY to check what's up. The biggest in the SPYs are some solar names. And there's one that's a healthcare name, which is Cardinal Health. It's having a really good day.
Short Google here, looking for a stop loss above about 128, and then looking to see if we can take some gains around 99.36. It's not the best risk reward, to be honest, but.
All right, I'm leaving that chart to the left-hand side for you here. On the right-hand side, I'll show you DG. That's having a little bit of a bounce back today. That's Dollar General, right? We'll see if that can continue bouncing. Remember, it got beaten down yesterday, so it's getting towards resistance. It's almost there already, so we'll look to see if we get some pullback on DG. I know Walmart stayed strong yesterday, even though DG was trying to drag it, so maybe looking at Walmart to stay strong. Walmart holding support around 150-150 today. Doesn't look too bad. If it can keep coming up through 153, eventually closing towards 154 will be looking good on Walmart. Dun, dun, dun. Costco got hit also yesterday, right? Is it continuing getting hit today? Yeah, it is getting continued hit. Looks like it's holding resistance right now around 497. Could come right back down to 495. We'll have to wait and see. But Costco definitely not having the best chart on the day.
All right, I'm going
Right
to go ahead and
there.
sell my Netflix calls here. So half we had a gain and the other half we have a loss, but the loss unfortunately was 7% more than the gain. So taking an L on that one, closing out the equity side as well on Netflix as that one comes crashing a little bit to the downside here. Let's see what else we can play with here.
Looking to see if Wells Fargo right now rejecting the VWAP. Financials not trying to hold on here. It's starting to get down there. But I've seen this happen multiple times. Let's see if this is finally the time that I can get in on these banks to the short side here and really knock them down. They've been holding up for a while now. Will they finally let go? $381.38 would be kind of the risk right now on Goldman Sachs. It's the one I'm looking right now for potentially shorting here. I'm going to wait right now. I wanted to see it kind of bounce a little bit here. The spread's a little wide. That's why I don't like going for a name like Goldman Sachs, maybe more like a Bank of America. It's already down on the day. Looking around, LAC continuing, so lithium names don't look too bad there. PLL doing well. Let's go back to some of the leaders here. Apple trying to hold the support right now. We'll look to see if it gets that next run up.
All right, come on. What we got? Where's my Google trade?
A lot of what I'm seeing right now is the SPY battling with the 404s. So it's trying to determine, are we coming back down? Are we holding up here in the 404 range? I got three 3-minute candles all closing around the same price right now. So we'll find out if we get that next run in the SPY pretty soon here.
Yeah, and of course, if you look at the SPY and you look left, you'll see rejection right from yesterday's lows. So that support is now resistance.
Any thesis on why BABA is climbing? Well, if you heard from Tom Hayes on my show on Stock Market Movers, I'll give you what his outlook was. He thought that the protests were actually a positive thing for the market because, of course, they've been coming down faster than most markets. And he feels that China's market's going to bottom first. So I can't blame him for that outlook. He likes BABA for the long run. So just giving that perspective out there. But my thing with China is I'm always just worried about the Taiwan situation. So that's why I don't take those swing long. But in the outlook that could be a bottoming first outlook, I understand that outlook. But the question is, do I want to make that risk? For me, I think that risk is a little too high, but I'll have to wait and see. SPY trying to get through the 3-minute high to the left, which is 404.28. Are we going to get that real push? Apple, you can see it's trying right now. So Apple is not a bad one to take a look at off the VWAP if you're kind of a short-term time frame trader. But I would look for more of the breakout above 146.80s and then going towards 147 if I was a bull here. And it does have a downward trend line that it could quickly flip on. And then all of a sudden it's back into a bearish pattern here. So be careful. A breakdown through 146 on Apple could show us that we're coming down. The battle's on right now, and I'm going to kind of be more in a watch, wait and see. Let the SPY tell me where it wants to give me the direction, and then I can look to try to get some of these trades.
Let's see what else we've got going on. Come on. Google trade still trying to here. Let me go ahead and remove these drawings. Yeah, right now you can see the market just kind of right above VWAP, holding, basing.
Holding, playing. Like trying to get traders to make a trade before the action. That's what you get sometimes right here, where traders are making the call before the action. And there's nothing wrong with that because if you're going off of levels, that's just the trade that you're taking. But that's how it gets us a lot of the times. It gives us this kind of little slowdown moment. All of a sudden, a lot of action comes in, and then we get that sped up action. Now it looks like we're going to get that action. Let's see what happens. SPY still closing kind of sideways right now. So that's really the kind of the sign that we're still battling here. Now we went through that 403.80 area, so it looks like we're on the downside of it right now. If you want to take some shots, I can't blame you. I'm going to probably take some shots here on the downside. We'll see what happens.
Yeah, waiting for this 5-minute candle to close below VWAP.
Starting to see some quick drop there towards the 146 on Apple. Tesla holding above VWAP. We'll see what happens there. Amazon looks like it's trying to break through the 94. We'll see if it actually does break down or not. Google hanging around. It has a longer time frame pullback that I kind of like if it starts breaking through that 99.75 for using it. It doesn't look too bad.
Yeah.
Still on that one, right?
On the Google short?
Yeah.
Yep.
Yep. I like that little setup. There's like a longer time frame trend line that if it runs into that, it looks interesting. I'll show you that. I'll try to put it up on my charts right now. So you see that kind of trend like this. And a lot of times we'll get like kind of peaking action 1, 2, 3. We get back through that 150, you got to be a little concerned. But if you break through that bottom line, or you could also maybe expect bounces near that bottom line, well, that could happen too.
Yeah, I need that trend line to break. That would be a beaut.
Mm-hmm.
SPY bouncing off of that VWAP again.
Also for the SPY, I mean, you could do this on like the 15-minute, understand the trend there a little bit more. You're holding that trend. We're going to see if that trend's going to change. Battle's on right now. Toasted. Charge point. Not charging today. What is in the green here? We got to find something. Defensives. Tobacco. It's wacko, man, but it's up. Brewers.
There's Google coming down. We're about 20 cents in the money around VWAP, so this could easily be a support area. I'm going to wait for a bit more of a crack. And I'm also going to lower my stop loss to about $100.11.
Whew.
What you gonna
Some
do?
growth
Google?
names really getting hit hard today.
Let's see if I can go here.
See these turn around. What happened with Wayfair? Whoa, Wayfair made a run yesterday.
Yeah?
Yeah, I didn't catch it. But after like 11:30, like 11:45 when we were off, it made a nice little run. All right, keeping an eye on these levels, really just looking to see if Google's going to break down here and SPY's going to break down, but it's just looking like there's a battle going on right now. Best Buy is continuing too. Man, that thing's been really strong since their earnings and Black Friday. All right, catching up with the chat. What's going on there? Shelly. Detroit Live. These two are not in Detroit. What are you talking about?
I'm definitely in Detroit.
In the metaverse?
Definitely in Detroit.
We're in the metaverse. Come on. It's where the server is, Shelly. That's what matters.
Let me see what my quality on this is. 1 sec.
I never paid much attention to using the SPY as a tool until watching Money Mitch. It's helped me tremendously.
Nice.
Being fairly new to trading.
Nice.
Literally why I do this, man. And it's for you to like see it and see how I look at it and then learn from that, right? I'm pretty sure that's what you've learned. And it's not necessarily to use it exactly how I use it, but if you see that it gives you some edge and can help you find some trades, well, definitely I like that. And especially another thing that I'll remind you, especially if you're newer to trading, a lot of this is because the style of market that we're in. When it's more what I call like market driven headlines that are moving the market, Well, you need to be paying attention. Like if it's macro that's moving the market, like today, economic data comes in and knocks us down. Well, that's when we've got to be paying attention more towards the overall market. But there's also a time, like let's say when we were in like that 2020 time when the markets were just going up, the only thing you kind of really mattered was what stocks were moving, because it made sense to pay attention more to the big rippers than in that environment than it did to pay attention to the SPY. But like always, it's about learning what environment we're in and how to best take advantage of that environment.
Yep, for sure. Ooh, you've got
the battle's still on that Google, man. They're battling on that 100, but the big thing is the SPY, right? It's not doing much. It's just hanging out right now and holding the trend. If anything, it looks like it's pushing back right now.
Let's see what we've got here. Yeah, you've got NVIDIA trying to come back above VWAP here. And there's the SPY above the 40-50 area.
All right, I'm looking at a reversal style move on Amazon off the 94s, but I need a little bit of a pullback action here.
All right, you've got the futures here. I'm going to take a quick ugly stab at this one. I went short the futures here at the 40.51. Stop loss for me will be high a day, which is going to be approximately 40.55.25. So I'm risking about 63.75. And I'm looking for a move to the downside here once again, if I can get that. It has been an unfortunate day for me. We started off green, then we tried to get too cute with precision, and then we gave gains back.
Amazon long. Just took a little bit there at 31s. If I can get 20s, I'll add a little bit. 94 is the risk right now.
Come on down, market. There we go. There we go. There we go. Come on. Come on down. There's no way you went right back up without giving my profits. Yep, you sure did. You sure did.
Yeah, that's how it goes sometimes. I was trying to add on that pullback. I didn't get to fill. Canceling it right now. It was that quick. Google's battling. We'll see if it comes back and actually cracks 100 or not.
All right, there we go. We went ahead and stayed patient, got filled to the downside. Quick little trade, and that's because we looked left and we saw resistance right here. But that's not it. If we continue looking left, you'll see that that's the same spot, right, where you had the low a day that we kind of talked about right there. So that's the reason I like that setup for a quick short scalp. Now, if it wants to go into VWAP and then break down to the downside, sweet. We can go ahead and try it again to the short side if it goes ahead and breaks this quick short trend line. But for now, quick and easy scalp, done with that trade. And there's Google, can't quite get over the $100. Let's see what NVIDIA is doing. NVIDIA with a nasty flush to the downside.
I added on that pullback for Amazon. I'm at 94.22 on the long side, risking off 94s.
Let me see here what time we've got our next interview. Give me a second.
No worries. I got it, Zune.
All right, bet. That being said, now you've got, see, this is why we take gains, y'all, because look at that. Right from VWAP, as we anticipated, there is the bounce. So you don't want to be too greedy. You want to go ahead and lock in your gains. And of course, you know, we love being transparent here. So here's my P&L for today on the future side, down about $200. And then on the equity side, I believe I'm down about 100 something. Yeah, we were up about $300, but unfortunately I gave some of it back, actually all of it back, when I tried to be cute with it. So we're down about $350 or so overall, including each futures and equity as well.
All right,
Aaron
liking the
Thomas, I
action
should have
here.
slept in. What you got here? I'll share your screen.
Looking for the SPY to break through the 404.60s here so I can start adding even into Amazon. Liking the position here. Averaged in at 94.22. But really, it's just all about the SPY just continuing, right? So you can see how we reacted to these highs and haven't gone through that. I want to see it get through that to give me confidence to go ahead and add to my Amazon position that we're still coming back on the SPY. And so you can see here on the 5-minute here for Amazon is this big old trend line. Then if you wanted, you could draw kind of sideways action here. You can see how we've kind of gone sideways here. Looking for this to come back up through this, going towards 95 if we really get moving. But the SPY needs to get towards that high. Remember, 404 is an important level that we just recovered. So I'd like to see that 404 hold on pullbacks right now. Not even crack through it. See if that happens. Like always, these are my levels. You guys choose your own levels and your own risk assessments, but it's been a fun time.
Let's see if we've got anything else before we hop out. LVS. That's a little too far out for me. Yeah, it just came crashing down right as soon as that happened. What did happen to Netflix?
What happened to Netflix is I watched way too many shows over the holidays and gave them a ton of subscriber money.
I mean, no wonder that the stock bounced from 300. Thanks to you, pal.
You're welcome. I'm here for you guys. I'm here for the markets.
Appreciate it, man. It's all you.
All right, gentlemen. Sorry, Aaron told me that we were running short on time and tossed me back in, so we are good to go. Thank you, Zunaid. Thank you, Mitch, for covering. We do have our guest in the background, so we're going to jump right back into it and make sure we stay on schedule for you guys. We're going to jump in with Sumitaka Yamamoto, the CEO of HeartCore, traded on the NASDAQ as HTCR, and move right into our next live interview. Let's bring him on. Welcome. Thanks for joining us. How are you?
Fine, thank you.
Excellent. It's great to have you here. Really excited. Our second live speaker of All Access. It's been a crazy day, as I'm sure you've noticed, people scheduling cancellations and everything else all over. So we're glad you're able to make it here with us for this live interview and really excited to learn more about HeartCore. So let's start from the top and just begin right there. What exactly is HeartCore and what does the company do?
Okay, so we are a software provider. We are providing CMS software and website content management system. We are a leading company in Japan, and we are based Japanese-based company, but expand U.S. business right now. We have over 800 enterprise customers, such as Toyota, Honda, Sony, Panasonic, big well-known brand. And we also start a Go IPO business. That we take Japanese customer into a U.S. Stock market. So we have several engaged companies. So two companies will be NASDAQ listed within this year, and another 4 will be next year. So this is quite going very well. And our growth rate is more than double or triple than last year. So, but our main business is a software provider. So we focus on invest at the U.S. market.
Yeah. Excellent. Okay, great start. Knowing what you guys do, talk to us a little bit about digital transformation. What exactly is it? How do you help companies achieve this? It's a big part of your business. Can you give us some insights about digital transformation?
Oh, yes. We also provide digital transformation software, such as process mining, task mining. So what is process mining is get data from backend system, for example, SAP or Salesforce, and analyze it. So sometimes enterprise company want to reduce delivery time or want to reduce cost. So however, enterprise company, it's very difficult to do that because nobody knows entire business flow, but our software easy to find a critical point. For example, they want to reduce a cost. Our software find this is a critical point, but we need to analyze the desktop data. Otherwise, we cannot analyze truly entire business flow. So we get the data from backend system. This is a process mining. We get the data from desktop. This is task mining, and combine it and analyze. So we provide DX solution, such kind of thing. And we also provide RPA, robotics process automation. Most RPA run on Windows, but our RPA run on Mac, iOS, Android too. And we also support very old OS such as Solaris, HPUX, and AIX. This is a quite blue ocean for us. So we provide this robotics process automation.
Fantastic. Okay, and I want to talk about HeartCore a little bit specifically. What about your management and your leadership team makes you uniquely situated to provide digital transformation? What about your team really sets you apart in this space?
Okay, so our team focus. I'm sorry. I'm living in United States, but main our team live in Japan. So we focus on now Japanese company, enterprise company, and our team providing a good solution. So nobody provide process mining combined task mining. So typically, another our competitor just providing process mining. So we are fully knowledgeable of this area.
Excellent. Okay, and let's talk about the consulting side of the business. There was a really interesting part of what you guys do when we did a lot of our prep work for this and started talking to you guys early on. So let's talk about the consulting side. It really seems to be a big part of what's making HeartCore so successful. What is the consulting side of the business, and what does it bring to your clients when you're doing it?
Okay, so when I decide to become a NASDAQ listed company, there are no information. It's nothing in Japan. But as you probably know, there are many Chinese companies listed on NASDAQ or NYSE. However, Japanese only four, just four, because nobody knows how to do that. So I decide once we became a NASDAQ public company, so I decide to do this kind of business. So we take a Japanese company to a NASDAQ. So we provide a consultation service such as convert Japanese GAAP to US GAAP and translate all Japanese documents into English. And that we organize underwriter, auditor, or lawyers. That we prepare all registration filing. So we charge 500,000 initial cost. And we also charge 1 to 3% warrant from their market cap. Once they become a public company, we automatically get 1 to 3% from their market cap. This means that one of our client, Airwing, they already announced their market cap will be 600 million. So we charge them 1%. This means we get 6 million from them. This is a good growth rate for us.
Fantastic. No, it makes a lot of sense. And so with 1% of these market caps, when you're talking about the consulting arm specifically, you just entered your 5th Go IPO consulting agreement with SBC Medical Group, who I think you may have mentioned a little bit earlier. But what role are you going to play in helping SBC go public? And what's led to this string of success? And more specifically, I guess, when you're helping a company go public and you're getting 1% of that market cap, what does the process look like helping them go public? What all goes into that?
Okay, so SBC, they are very big company. So their revenue is over 1 billion. So and they have over 10 subsidiary company. We have to convert all Japanese statement into US GAAP. This is a little bit tough work, and we translate all documents, include the paper. So in Japan, we use many paper document for the invoice and pro forma invoice and contract, everything. So we translate everything into English. We also organize underwriter, auditors, and lawyers. And the SBC group decide this pack. So we prepare S4 filing right now. So this is our typical work.
Outstanding. Okay, all good insights on the consulting side. Now, I want to talk about HeartCore Day a little bit here too. Really, really interesting. You just hosted your first in 3 years in Tokyo. First of all, I'm curious to know, I'm sure COVID affected the HeartCore Day very much when that was going on. I'd love to hear about how you guys came out of that. But what exactly is HeartCore Day 2? Can you tell us what's so significant about it?
Oh, yes. We have a HeartCore Day previously, but due to COVID-19 situation, we hold it, and we have again this year. So there are over 300 enterprise clients visit our HeartCore Day. We have several truck, 18 truck for the customer truck or our own truck. And that is a great success. We have several pipelines right now, and our revenue is going up. So that is a great day for us.
Terrific. Okay, so knowing more about that, I also want to talk about some more of the recent news that you guys have, in addition to just what you're doing on the facility side of the business. You recently acquired a majority stake in SigmaWays. What's so big about this for HeartCore? Why does it matter so much, and what is it going to mean for the business moving forward?
Okay, so SigmaWay is a San Francisco Bay Area company. They have around 17 clients, and their revenue is about 12 million this year. They are SI vendor. They provide the software for the customer. So we acquire them, and we have a very synergistic business with them, because our customer in Japan, they always require the development or the customization for each company. So we don't have any engineer at that time. So we always ask our partner companies to providing development or customization for the company. But from acquisition, we provide our customer with our own service, customization and development. And of course, SigmaWays has good sales here in US. So they already try to sell our software. So this is quite big synergistic. So we growth rate is more than double for each other.
Excellent. Okay, great info there too. And so let's go back to the process of going public as a company, right, a little bit, right? And what you're helping the companies do here. What's the biggest challenge facing a company when they're going public? What is the key to a successful IPO in your opinion? And start to finish, a perfect process going public as a company, what does that look like? What are the key factors that need to be there in order to make that IPO successful?
Okay, so main key factor is a passion of a CEO. So this is most important. There are many hurdles. There are many difficult cases they have. Typically, I also have a very big barrier, but always passion solve these kind of problems. So I always ask the company to have a passion. So this is a big case. And another technical issue. So Japanese law and US law is quite different. Sometimes it's a conflict. So this is big challenge for solving the kind of problem. So for example, it's a stock. The common stock, it's easy, but the Japanese company have to use ADR, ADS, and this is a little bit tricky. So we always engage a lawyer, each country, US lawyer and Japan lawyers, and discussion and find the solution. This is a big challenge for us.
100%. Okay, with the keys that go into a successful IPO, let's talk a little bit about SPACs and how they've become a traditional, maybe popular alternative to the traditional IPO process in the past couple of years. It's had a huge boom, especially in the last few years. We saw a lot of companies go public via SPAC, and some of them went really well. Some of them had some variable success here and there. But with the SEC proposing some new regulations around their use, what's your view of SPACs? Would you ever encourage one of your clients to take that route? Do you think they're a wise option in the first place? What's your overall opinion on the SPAC market as a whole?
Okay, so at this moment, just at this moment, so NASDAQ, the IPO is very difficult situation right now. But the SPAC is it's more than easier than IPO. So sometimes it's the opposite side. The SPAC is very difficult. IPO is very easy. But at this moment, SPAC is very easier than IPO. This is my point of view.
Got it. Okay, great to get your insights there, especially with what you guys do, just considering how popular SPACs have been and what an insane market it's been the last couple of years. So great to get some thoughts from you on the SPAC side of the market. Now, let's also talk about the market a little bit as a whole, right? And I think you're the perfect person to talk to right now with the macro environment that we have going on. We talk with every single one of our companies about this because no matter what sector you're in, no matter what your business is about, the global environment will affect all of us at some point or another, right? So as you look at the market over the last couple of years, do you feel that there are any growth drivers or any threats that have affected your business from the COVID-19 pandemic to the rising inflation we have now, geopolitical trade uncertainties, and everything else we have going on? Is there anything that you're particularly worried about in the next couple of years when it comes to your business?
Yes, we are now applying the investment bank license right now because our revenue is more than 40. I'm sorry. Our Go IPO revenue is more than 40%. So we have to follow the SEC regulation as they require investment bank license. So we apply it. Our key factor for the next couple of years is yes, the Go IPO business. However, once we engage the Go IPO client, they automatically buy our software. So this is also a synergistic business. So, but the Go IPO is our key factor for the next couple of years.
Got it. Okay, and you mentioned Go IPO there. We haven't really had the chance to talk too much about it. Tell us a little bit there. What are the most important parts of the Go IPO transaction and what's going on there? Why is Go IPO so important for HeartCore?
Yes, because for the Japanese economy, as you probably know, Japanese stock market is not so good for the IPO. Once the tiny companies, such as, for example, 20 million revenue company willing to become a Japanese stock exchange market, their market cap will be only 40 million, and they can raise only 3 million money. That's it. So they cannot make a big company, but the US market, but easy to raise the money than the Japanese stock exchange. So it's better to become a NASDAQ listed company. And Japanese economy shrink, but globally it's also growing. So Japanese company have to go outside of Japan, otherwise everybody shrinks. So this is my opinion.
Makes sense. And when you look at the future for HeartCore specifically over the next couple of years, what does the growth plan look like? How do you phase up to the next level as a business? Is it just a higher volume of taking companies IPO? Is it other kinds of deals? Is it larger deals? What does the growth plan look like for HeartCore over the next few years here?
Okay, so we still focus on the software business. We now try to acquire another company. We are now negotiating 3 different companies in Singapore, Japan, and the United States. So we try to acquire several software company and keep to acquire. This is one growth engine, and then another growth engine we provide many different software to our existing customer. Fortunately, we have over 800 existing customer, and our retention rate is over 95%. This means once our client decide to use our software, they never leave. So we sell them our new technology, so we can do the upsell and cross-sell to our existing customer. This is another engine for us. And also, of course, we Go IPO is important for next couple of years.
Terrific. Okay, and then kind of a hot take from you on the economy, right? And as we look at the future with again, we've talked about the looming potential recession already as we head into the end of this year with a couple of other guests. Let's look at the market as a whole. If there were three things that you had to identify for companies to do to survive the looming recession, if we do see one, but also thrive on the other side of it too, come out of it more successful, what are those three things that every company should be focusing on when it comes to their overall business strategy?
Okay, so due to that recession comes, and the company have to reduce the cost, have to reduce human works, many things. So every company focus on digital transformation. This is good for us because we already provide a good solution. And of course, the company have to get a new customer without human work. So our CMS help them to get the new client with the company. So this is another good thing for us. And also every tiny company want to become a big company. So recession is a big chance. So bad economy is a good chance to growth for the new business. So in the bad economy makes a good company. So this is I think this is a good chance for our Go IPO client.
Fantastic. All right, it's been an absolute pleasure talking with you. We got some really interesting insights from you. Actually, two really interesting guests. We had Onfolio Holdings on earlier, and they're obviously acquiring digital portfolio businesses. And you guys are helping companies go public via IPO. So really interesting process there. Really interesting insights from you about what you do, but the market as well. It's been a pleasure having you here. Thank you so much for joining Benzinga All Access.
Thank you very much. Thank you.
All right. We had our next live speaker there. That was Sumitaka Yamamoto, the CEO of HeartCore. We do have our next live speaker on. Had some scheduling changes and some things lined up all the way to getting here. It's been a crazy morning for him to join us here on All Access, but we do have him in the studio, so we're going to bring him on, and we're going to get started on our next live interview. Ed Schmaltz, CEO of StateHouse Holdings. Thank you for joining us. How are you?
Good morning. Maybe a little haggard. I took a red eye from California back east, and it was delayed, and normal travel drama. But here I am. So,
well, normal travel is hard enough. It sounds like you had a more drama than most of us when we're flying. So glad you made it here. Thank you for making the effort to get in last second and join us. It's great to have you here as always. We've had you on All Access before. Really excited to talk with you again. But reintroduce us to StateHouse Holdings really quickly for anyone that hasn't seen you guys. What is the company all about?
Sure. So StateHouse Holdings is a cannabis company, and it was formed by the combination of really four great companies in California: Harborside, Sublime, Urban Leaf, and Loudpack. And that sequence of deals, the final one, Loudpack, closed on April 4th of this year, and that was StateHouse. So we have 14 retail stores, 230,000 square feet of cultivation, a manufacturing facility in Greenfield that can produce all the form factors. And we've built a really strong team to address the many challenges in California.
Outstanding. All right, great start. So let's jump into it and let's talk about being vertically integrated, because that's a big part of what StateHouse is and all these companies that are coming together. We'll talk about the combination of these companies and why you chose them in a minute. But being vertically integrated, what advantages does this bring? Are there any challenges that come along with it? What exactly is being vertically integrated? Can you give us a general sense of that?
Sure. Why don't I start with that last part? So being vertically integrated really means that you're involved in or control your entire supply chain. So in StateHouse's example, we cultivate, we manufacture, we sell at retail, and we sell our branded products at wholesale across 800 stores across the state of California. So controlling your supply chain like that, I think, gives you ability to really capture the entire margin. And we're seeing that product that we grow, we manufacture, and we sell in our retail stores, we're getting in about mid-70s gross margins. So despite a very difficult cannabis market in California, our retail stores are enjoying strong margins. And we're currently about 40% of our product sold is our own product in our retail stores. And we're looking to take that up to 45, maybe as high as 50. Although I believe if you're over 50, you tend to detract from the overall retail experience. But I have to say, I sure like the gross margin possibilities that we're seeing right now. So 45-ish probably feels about right for the percent of sales coming from our own brands in our own retail stores. So I think that speaks to, one, you control your supply chain. You can choose, you want transparency, how you talk about it with your customers, and then you get the benefits of that, of capturing that entire margin, and really helping you control your price and your segmentation in the market for your customers.
Excellent. Okay, so now let's talk about, StateHouse being composed of a few different companies that have all come together here. It's the result of a merger between 4 companies. Talk to us a little bit about the impact that it's had on the business. How has this changed the culture of all 4 companies? And just give us an overview of the entire process, right? Why these 4 companies came together and what advantages and disadvantages it brings to the table for StateHouse.
Sure. So Harborside and Sublime had merged a year earlier. Harborside, as you probably know, is a great legacy brand. Really started in 2006, focused on in the Bay Area, Oakland, San Francisco, San Jose, although they do have a store in Desert Hot Springs. The thought process behind this merger was what we just spoke about. How do we get vertically integrated? How do we get scale so we can drive efficiencies? And how do we get the right combination of cultivation, manufacturing, brands, and retail so that we can address the entire market? I think we sort of have a Goldilocks combination of assets here. We don't have too much of any one business. We don't have too much manufacturing, too much cultivation, and we have an opportunity to grow the entire business. And we're really seeing the promise of being vertical, as I mentioned earlier, with those robust gross margins at retail. Some of the challenges of putting these companies together, obviously culture, right? Each one had its own culture. I'll come back to that in a second. We had many duplicative processes. We really wanted to consolidate quickly around our largest and most efficient manufacturing organization, for example. So that entailed headcount reductions and closing down some operations. But we felt it very important to just quickly get to our future state and start working on normal business improvements, and we did that. And the work to create a culture is ongoing. I'm very pleased over the last couple of months. It seems like we've shed our individual brand loyalties, and people are putting on their StateHouse, brand, and they feel comfortable that now we are StateHouse. We're embarking on a mission, cultures, and value work right now, where we're going around talking to groups of employees throughout the organization. This is very important to me. I don't want the culture and values to be Ed's culture and values. I really want it to come up from the team so people can feel motivated and buy into, yes, this is our culture. It's not that Ed guy who travels around. It is all of our culture and values, and this is important to us. So that's taking some time. Early meetings have been, it's very exciting, the thinking and the enthusiasm that the employees are showing, and I look forward to really rolling out a kind of a codified set of mission and values that we've all had a hand in creating in the first quarter.
Excellent. Okay, and as a part of all that, you guys claim to be California's most developed cannabis platform, right? Can you take us through some of the reasons that you guys view that as being what you are, the most developed platform in the space right now?
Well, I think we've got some real strengths here. We were just named California's #1 and #2 cannabis retailers in the entire state by an LA magazine. Harborside was #1, Urban Leaf was #2. Fantastic. All of our retail stores are on a common technology platform, which I think matters in terms of controlling data and being able to roll out other programs like loyalty programs to our customers, to give them reasons to continue to come back to our stores. It can't be just about price, right? It has to be about service. It has to be about the heritage and the confidence that, hey, those retailers know what they're doing, those Harborside and Urban Leaf people, and I'm going to take my business there. we're rolling out home delivery around our retail stores so we can keep that customer in the fold, whether they want to come to a store, buy online, pick up in the store, or stay at home and have it brought to them. Our manufacturing operation, we're adding additional automation to drive efficiencies there, and we're expanding our white label business. So we're making manufactured products for other brands to leverage our large capability there and to cover fixed costs. And then on the cultivation side, we're in the midst of making some additional adjustments to our cultivation, adding some additional lights and CO2 capabilities to enhance yield, while at the same time really focusing that operation to drive down costs. So I'm pretty upbeat about our ability to continue to deliver excellent product and excellent services to our customers, while at the same time driving additional efficiencies that are going to directly impact our bottom line. And that's the game in California, right? It's the world's largest market. Fantastic. But you've got to be lean, and you've got to be willing to, just fight every day to satisfy that customer and to generate repeat business. And I think we have the right team to do that.
Great. Okay. And speaking to that, right, you just talked about the top line a little bit, 77% increase in Q3 revenue year over year. How did you guys achieve this? It seems, obviously, whatever you're doing seems to be working here with the vertically integrated brand, but can we expect more numbers like this going forward? What do you think were the key growth drivers?
I wish. I mean, the bulk of that came from adding on the new businesses, right? Particularly the Urban Leaf retail stores, which really drove that growth. Comping that in the second quarter of next year, I do not expect to see a 77% growth number unless we do some sort of large acquisition. I think in 2023 in California, it's tough out there now. And a lot of companies are struggling. And we just need to remain focused on our customer, delivering great products at really good value, and then making sure that we are constantly looking to adjust our cost structure down and be as efficient as we possibly can. And if we can do that, maintain those customers' relations, enhance those customer relations, and something we're doing that maybe a lot of companies aren't yet is we're really working hard to build our relationships in the industry with like-minded companies. Some might even call them competitors. We are, if their stores are not overlapping our stores, that's an opportunity for us to put our brands there. So I think in difficult times, I think all great companies figure out how to manage their business and what to go after to take advantage of that difficulty and position themselves for future success.
That makes a lot of sense. Okay, and to dig into that a little bit further, right? You just talked about the tough environment that we're seeing out there right now. What are some of the factors going into making the environment so difficult to work in? What are some of the challenges ahead? Obviously, we know about the cannabis industry and the biggest things that are holding back some of the growth we all think that can be seen. But what are some of the things that make your environment specifically so challenging?
Yeah, I think California has a very well-entrenched illicit market, right? It's probably 2 or 3 times the size of the legal market. And, they don't pay taxes. So automatically sort of a 25% discount to our prices. And I think when people hear the illicit market, they think, oh, some guy on a street corner, with a bag of weed in their pocket. No, that's not the case. Some of these illicit stores are beautiful, fully built out, well merchandised. You walk in and you think you're in a high-end store somewhere, but you're not. You're in an illicit shop. So that's a big challenge. I think gas prices in California, famous for many things, one of which is high gas prices, have been a challenge, and food inflation. So particularly customers with under $100,000 in household income, I think they're reducing purchases, reducing frequency of purchases, or transitioning to the illicit market because they can save money there. So to me, those are the 2 big challenges. If law enforcement could step in and more aggressively go after the illicit market, that'd be a significant improvement for the legal California cannabis industry. There are signs they're starting to do that, and I'm holding my breath because, as I said, I think this is absolutely critical to the legal industry's success, and I'm hopeful that Governor Newsom and law enforcement across the state are indeed stepping up and making a concerted effort to shut down illicit cultivation, manufacturing, and retail.
Got it. All right, good insights there. Now, improved practices is what you attributed the Salinas facility Q3 production in being up over 150%, the cost per pound being slashed by 56%. Can you talk a little bit more about some of these practices that led to these improved numbers?
Yeah, so I think people need to remember cannabis is a plant, not yet a crop, right? So there's a lot of variety to plant, to grow techniques, and really overall kind of management efficiency of a large scale greenhouse operation. So we've made significant improvements to our understanding of the plant, how we manage it. We're on a perpetual harvest there, so product comes out on a weekly basis. We've done a lot of testing and experimentation and really figured out our greenhouse operations, things like plant density, branching, all the kind of horticultural aspects of cannabis, and the results have been very positive. So we're looking to continue to refine. We're not going to have as much growth as we saw this past year, but we are expecting some significant improvements in our yields, in our grams per square foot, as we add additional things like light and CO2 to our operation to enhance the plant's life and its ability to grow.
Understood. Okay, a couple of other things I want to run through here. Before I get too deep into some of the more recent news that we'll discuss really quickly, I know you guys have an updated deck too. We actually received that earlier this morning. If there's anything specific you want to pull out in there, we'll get it up on the screen. Anything you want to look through investors on before we dig in?
I think, sure. Why don't we pop up that? Oh, you did. There you go. I think the third page. So that's the first. There we go. So nope, not the legal language. There you go. So I think this is really important. What we're trying to do is consolidate California. It's the world's largest market, as I said earlier, and I think the most influential. And scale matters in here to drive efficiencies. So we've addressed that. And then building a portfolio of leading brands. Our King Roll brand is the number 2 in the fast-growing infused pre-roll section. Smokies and Dime Bag are both in the top 5. And as more stores begin to be built out in California, as more municipalities open up, currently almost 2/3 of the municipalities in California do not allow cannabis retail. We see some significant growth in retail stores, which is additional real estate for our brands. That shelf space needs to be filled. And we think we can be a core part of anybody's selection. And then, our retail business, while I love winning accolades like the number 1 and number 2 retailer in the state, I think more important is that relationship with a customer, that we are able to every day understand what he or she is buying, what different age demographics are buying, what promotions move them, what price points move them, what combination of products matter. And I think that close relationship with the customer really gives us an advantage over a brand that perhaps doesn't have retail, because all they're doing is getting orders from buyers, and they don't have that last mile connectivity with the customer. And that's something that we treasure and value very highly. So I think those 3 aspects of really building out a dominant space in the world's largest cannabis market, having top brands, and then maintaining and enhancing that relationship with our customers is a recipe for success.
Understood. Okay, and another recent piece of news here, I want to make sure I'm pronouncing this correctly, but Nabis, California's largest distributor, if that's how you say it, you guys recently partnered with them. What does this do for StateHouse? Obviously, the largest distributor in California sounds like a big deal. I'm sure it offers up a lot of advantages. What does it mean for the business going forward?
Yeah, well, it's a driver of efficiency. There's a reason people don't develop their own overnight delivery services. There's FedEx and UPS, and those companies are extremely efficient and move packages across the country, around the world, very well. And that was our thinking with Nabis. If they can do this more efficiently than we can, they have a better technology stack, capturing data better, and then with their scale, we believe that that's also helpful in terms of collecting our accounts receivable. As you can imagine, in a challenged retail environment, for a lot of retailers, staying on time with their bills is a challenge. And putting on my retailer hat, the first two bills we paid every week were Nabis and one of the other major distributors, because they carried a lot of the brands that we needed to put on our shelf. So I like the leverage that Nabis brought to the table as well. So much greater scale, much greater ability to move our product all across the state efficiently. We're saving a significant amount of money versus doing it ourselves. And I think it's the right move in the long run.
Understood. Okay, drawing close on time, I want to ask the biggest question that I think is probably almost always on everyone's minds in this industry, right? Federal legalization, right? When it comes down to this topic, we talk about it at every one of our Benzinga cannabis conferences. We probably will be for some time until it happens. What's your take on where we sit now in the industry? What do you think has to happen in order for this to finally become complete?
So, obviously what Biden did over the summer is encouraging, and having the administration look at descheduling, I think is certainly a win, just because that would give a lot of options in terms of what the government could do. I do think SAFE Act is likely to get done in this lame duck session. In terms of full legalization, though, boy, my view on that is I think the federal government is going to leave that to states. There are a lot of jobs, there are a lot of tax revenues in states that would likely suffer if it went fully legal, and those jobs and tax revenues would go to California, Texas, places more conducive to growing cannabis than Maine and Massachusetts, for example. So I think full federal legalization is likely pretty far down the road, but I do think SAFE Act, and then slowly improving, cannabis's view, certainly in the financial world, would be a win for the cannabis industry. Getting more capital, different and stronger banking relationships, and then being able to list on U.S. exchanges, those would make a big difference. Would drive efficiencies to the organization, to any cannabis organization, and help them thrive. So I'm hopeful for SAFE Act, and then continued incremental progress in the years ahead.
Fantastic. Ed, great to hear about the progress at StateHouse. Always a pleasure to talk with you. And of course, joining us after a red eye and some crazy travel getting here. So glad you were able to jump on with us.
I as well. Thanks very much. Appreciate it. Always good to talk to you.
Always good to talk with you as well. Ed Schmaltz, the CEO of StateHouse Holdings, trading on the OTCQX as STHZF. And with Ed leaving us, we're going to move on to our final speaker of All Access to keep things rolling to stay on time. We're going to talk with Dennis Ferris, the CEO of Dragonfly Energy. We'll bring him on and get started. Dennis, great to have you with us. How are you?
I'm doing great. Good to be here.
Pleasure to have you here. Really professional setup behind you, too. Looking great. Where are you coming to us from today?
We are in Reno, Nevada, and we've got a great team here, so I'm proud of it as well.
That's great. Really excited to chat with you, Dennis. Dragonfly is a fascinating company. You guys are working on a lot of really exciting stuff. Let's dive in at a high level. Give us a 30,000-foot view of Dragonfly and what you guys do.
Well, Dragonfly Energy is a lithium-ion battery technology company, and we are very well-rounded in that we've got a great retail base. We've got customer pipelines. We've got a robust supply chain in terms of our manufacturing of deep cycle lithium-ion battery packs. We've made some great headway and achieved some fantastic traction in a number of markets that are typically dominated by lead acid batteries for deep cycle storage. These include RVs, boats, off-grid storage systems. We're at a fantastic point right now in terms of our ability to reach out and tap some other markets that are currently dominated by lead acid batteries. And at the same time, we've got a very strong and robust intellectual property portfolio having to do with the manufacture of lithium-ion battery cells, completely chemistry agnostic, so all kinds of different lithium-ion battery cathodes and anodes, but we focused on a specific deep cycle solid state storage technology that we're really excited about, because it's something that really hasn't been the focus of a lot of battery technology companies. That is the storage angle. A lot of battery companies are really focused on electric vehicles and propulsion and energy density. And so it puts us in a really unique spot in a very exciting industry.
Terrific. Okay, exciting start. Let's dive in from there and keep going with this. Tell us a little bit more about the technology, right? What makes Dragonfly's products different from competitors in the space and the industry that you guys are in? And if I'm not mistaken, you're actually the one that develops your technology and your products as well, correct?
Well, we've got a much larger team, but as the founder, I developed the core technology having to do with the manufacturing processes for lithium-ion battery cells. But in terms of our core business, which is the assembly of lithium-ion battery packs, we've got a team that's very strong in product development. We've developed a whole slew of lead-acid battery replacements. But I think what really sets us apart is we focused on onshoring the assembly. We design all of our products. We assemble our products here. And we therefore are able to support the products in a way that's really unique in the industry. That's allowed us to really garner an incredible reputation, not just among our retail customers, but also among our OEM customers. So we are very prevalent in the RV space, and we've got a strategic partnership with Thor Industries, the largest RV manufacturer in the world. And so it really is our technology and our reputation that sets us apart.
Terrific. Okay, so knowing that, moving into what you guys are doing, you guys are an American-based company, right? Is that particularly common in the lithium-ion battery space? What does it mean for Dragonfly? Are there any advantages that come along with that?
Well, it's becoming increasingly more common, I would say. Certainly, the development of a lithium-ion battery infrastructure domestically has been forefront on a lot of people's minds. Certainly we have a very strong reliance on China currently, and that's something that a lot of us here are trying to change. So I think it's being American-based is important for us because we've been doing it for a while. Being in Nevada is significant because there's a lot of lithium here in the ground in Nevada. But we're unique also in our space. So in terms of the deep cycle energy storage space, assembling the batteries here, really doing a lot of the work here domestically is pretty unique in this space, in the RV space, in the marine space. And that's something that we've always been very proud of, and we're going to continue to expand on that domestic production, especially when we roll out our lithium-ion battery cell manufacturing technology. That will be done domestically.
Got it. All right, awesome. And moving forward from that, you guys, talking a little bit about the company specifically, you guys have a strong commitment to the environment. It's talked about pretty frequently, big part of who you are, and seems to be a big part of your ethos. So how does that affect how you do business? Are there things that you do differently that other people in the space might not be doing to kind of maintain that commitment to the environment?
Yeah, there's a number of facets to that question, actually. So first of all, the technology that really started Dragonfly Energy, the development of the manufacturing processes for lithium cells, was really focused on energy efficient, space efficient manufacturing processes that eliminate a lot of the toxic components, the solvents associated with conventional lithium-ion battery manufacturing. That's the technology that we are in the process of rolling out, building a pilot facility for. In terms of our core business and assembling battery packs that replace lead-acid batteries, that also has a very strong environmental component because lead-acid batteries globally are a challenge environmentally. Lead obviously is a toxic heavy metal, and if lead-acid batteries are not adequately recycled, they can wreak havoc with the environment. So, even the very, very small percentage of lead-acid batteries that are not recycled, especially globally, not domestically here, really do have an extreme effect on health and the environment. So combined, our core markets, our core products that we sell now, and the technologies that we're developing are focused on environmental issues that we're solving. And the long-term goal, ultimately, with rolling out the new manufacturing processes, is to facilitate a robust electrical grid, which ultimately will allow for more solar and wind, more intermittency onto the grid. So that in itself, the mission of the company is very much a mission focused on mitigating climate change.
Got it. All right, great insights there. Really exciting too, and great to see that kind of commitment to the environment. And obviously, it seems to affect the way that you guys do a lot of things. But really exciting to see how that works in your business as well. Let's also talk about the leadership team, right? What kind of experience does your management and the people that build the products bring to the table? What does it mean for Dragonfly to have these kinds of people, especially in regards to the science behind your technology, right? Which obviously is pretty extensive. What does the management team kind of play as far as a role in developing what you do?
We've got a pretty new management team. I mean, honestly, this is a company that's been around now for 10 years, and we went public this year, and so we've expanded our management team dramatically over the last year. And in the process of becoming public, certainly we've had to expand our finance departments. We'd have to expand our marketing department. We had to expand our sales department. So that involved bringing on talent. And moving forward, that talent is going to be critical to the growth of this company, not just in rolling out the new technologies, but in growing our core business of selling deep cycle lithium-ion battery packs. We need to break into other markets that we don't have a strong footprint in now. Things like work trucks and data centers and other industries that are currently dominated by lead acid batteries. And I think it's important to have a strong management team to understand how to do that. You know, when we were focused historically on one primary market, RVing, we did great, but now we've got to expand our footprint. And that, I think that's where the management team is really important. Now, concerning the science and technology, we've grown that team dramatically as well. And you know, now that we have more resources through the recent transaction that we've had of going public, there's going to be a lot more time and man hours devoted to the continued development, but more importantly, the rollout of the technology, the construction of our pilot line, and you know, bringing that new technology to market is super exciting for us. I think it really is central to our value proposition moving forward, and you know, a strong management team is required for continued execution.
Excellent. Okay, really interesting there. Let's start to talk a little bit about some of the business side of things, right? You just listed on the NASDAQ. What was that process like for Dragonfly? What new opportunities does it open up for you guys? And for the investing side too, what does it mean for investors in Dragonfly to now have you guys publicly traded?
Well, you know, it was the natural progression for the company. You know, this is a company that that grew dramatically over the last, you know, 5-6 years. We hit an inflection point. We got to the point where we needed to raise some capital to continue the deployment of the cell manufacturing technology, the solid state cell deployment. And we got to the point where we had to devote some more significant resources to the growth of our downstream markets. And therefore, it was the natural progression. It wasn't something that I think was a goal of the company. Oh, we have to take this company public. This was just something where we hit a point where we needed to get to the next level. Being on the NASDAQ is important for our reputation. It's important for our ability to garner more larger customers. Now we're very transparent. You know, we report publicly, and therefore it's easier for larger companies to understand who we are, to very rapidly gauge where we are, both financially, but also technology-wise. Obviously, we're out talking about the company a lot more now. So being a public company is exciting, but it really just gets us on the playing field. It's not. It wasn't the the be-all end-all. This was just, as I said, the next step. It gets us on the playing field. It gets us to a point where we can continue growth in a way that we were able to in the past, but as a smaller company, we could do with the resources that we had. But now we're actually, in the big leagues. That's how I like to think about it. And growth will only accelerate from here. Technology development will accelerate, and it's just a really exciting time for us and for everybody in this company.
The growth and vertical trajectory, it's always awesome to see and really exciting, obviously, for you guys too. So congratulations on that. A little bit more on the recent news side of things too. You announced that all Keystone RV units, the largest towable RV manufacturer in the United States actually, will be shipping with Dragonfly batteries. So obviously this sounds like a really big deal. Tell us what's going to have to happen to make this possible and why it's such a big milestone for you guys moving forward.
Well, it's been happening. So Keystone has been delivering every product with Dragonfly batteries on board. And this is important because it really is a game changer in this industry, because conventionally towable RVs are delivered without batteries, and it's up to the dealers to put batteries on board. So Keystone has been a fantastic partner to work with for us because they've been very proactive in terms of developing the energy system on board. They've worked with us for years now in terms of working with the customers and determining what is the best product. And we love development. We love developing new products, and to have a partner like Keystone with a direct and robust communication with their customers allows this process to evolve in a way that we really feel confident that we're putting out the best product. So now we have an industry-changing scenario where every towable RV from the largest towable manufacturer is being delivered to the dealerships with lithium-ion batteries on board. This is not trivial. This is game-changing for the customer, because there are things you can do with lithium-ion batteries that you simply can't with conventional lead-acid batteries on your RV. All of a sudden, you can power an air conditioner, a hair dryer, microwave oven. Very high-powered devices. You can put solar on the roof, and you can basically boondock, which means live off-grid. And Keystone's customers have been learning to do that and have really reaped the benefits of this new type of RVing. And Dragonfly, as the battery supplier, as a battery developer, we're so proud to be part of that change. We see it as a microcosm to a much larger change as we get to stationary storage and the growth in that market, and ultimately revolutionizing grid storage. But having a partner like Keystone to get to that level with us is really exciting, and it's been a fantastic experience for us.
Amazing. I want to build on that a little bit too, coming out of all that momentum there. So much of the attention surrounding the lithium-ion batteries, especially recently, has been focused on the EV market, right? And we have plenty of headlines in the EV market with Tesla and some of the other companies coming for its market share and everything else going on there. But for you guys specifically, what other applications are lithium-ion batteries suited for? Is there some other kind of untapped market that you guys are looking to get into?
It's funny you mentioned the focus on EVs, and you're right. Typically, new lithium-ion battery technologies, whether it be solid-state electrolytes or lithium metal anodes or silicon anodes, really is focused on energy density, on charge rate, on metrics that are critical to making an EV battery such that you can compete with an internal combustion engine. We are focused on something else. We're focused on deep cycle storage. So we're less. Although energy density is important, by energy density, I mean how heavy the battery is. Ultimately, yes, we want a lighter battery, but we're not concerned about driving 700 miles on a charge, right? We are more concerned about what's called the levelized cost, which is what is the cost of the battery over the lifetime of the battery, in terms of cents per kilowatt hours of storage. And so this is really the manufacturing costs amortized over the lifetime of the battery. So we're looking at long cycle life chemistries. That's why we're focused on lithium iron phosphate, graphite anodes. They're not the most energy dense, but they have been shown to last a very long time. And so that is a unique focus for us. The fact that we're focused on solid state batteries for our next generation, for the technology that we're in the process of developing right now and building a pilot line for right now. The reason we're doing that is not because we're trying to make a car battery, but because we're trying to make the battery non-flammable. Because ultimately we see a world where we have a large amount of storage in basically every building tied to the grid, because that level of distributed storage will provide for a more robust grid and allow for a lot more intermittency on the grid. That is, if the utility companies need to put more power on the grid, for example, to charge a lot more electric vehicles, then rather than building more fossil fuel burning plants, it actually is more cost effective to put more solar and wind and renewable sources onto the grid instead. So in that case, our focus of lithium-ion battery technology development is pretty unique. And I don't know that I'd call it untapped. Certainly, there is a lot of other storage technologies that work grid for centralized grid storage, things like pumped hydro and gravimetric energy, and other technologies that are relatively cheap. But in terms of distributed storage and last mile residential storage, I think we've got something that's really unique as we continue to roll out this technology.
Amazing. Okay, really outstanding there. And a final question for you as we kind of start to sign off here. Let's look ahead into the future a little bit, right? It's kind of a hot take question, but if you look 10 years down the road, how big do you think the lithium ion market can be? How big do you think the market is for what you guys are doing right now? And do you see any big changes coming for it that might affect your business or the industry as a whole? Anything that investors should be paying attention to on the horizon?
The market is enormous. I mean, the EV market, the EV battery market has been well publicized. The grid storage market has been less well publicized, but is just as big. And when you consider the fact that we want a day or several days of storage on the entire American grid, that you're talking trillions of dollars. So the actual grid storage market, I think, is much larger than it's been given credit for to date. Now, in order to make that happen in a meaningful way, we need more lithium. And it's not that the lithium doesn't exist, it's just that it needs to come out of the ground. And there are technologies that are being developed now to more efficiently extract the lithium and mine the lithium, and importantly, recycle the lithium from spent batteries. And so the biggest change that's going to happen is the increase in domestic infrastructure, and also infrastructure throughout the rest of the globe outside of Asia, because China has already built out a very impressive infrastructure in that regard. But I think the mining, the recycling, the processing, and the cell manufacturing is going to continue to grow dramatically in the near term, limited only by how fast we can get the lithium out of the ground.
Awesome. Painting a really exciting picture there, and obviously there's a lot more to come in this market, and a lot more that you guys are clearly going to bring to the market as well. So really looking forward to talking to you guys again soon. Thank you for joining us from your beautiful studio in Reno, Nevada. It's a great first conversation. Can't wait to chat again soon.
Thanks, Michael. It was a pleasure to be here.
Absolute pleasure to have you. Dennis Ferris, the CEO of Dragonfly Energy, traded on the NASDAQ as DFLI. Our final speaker of the show for All Access. A couple of final wrap-up notes, as always, before we get ready to sign off for a couple of hours and bring you stock market movers at 1 o'clock with the two gentlemen who were on just about 40 minutes ago. So before we take off, we, of course, want to thank our ticker sponsor, as always, making every single Benzinga All Access show available, bringing the speakers to us live, and getting the show up and running every single Friday. So we're going to play that video for ticker one more time, show how to get involved with their platform and get stock perks, and then we'll move into the end of the show.
What is ticker? That's right, ticker with two I's, just like you, because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering.
And that is going to wrap it here for us and the Benzinga team on December 2nd on Friday. We're going to head right into the weekend after this. Hopefully you all have some fun plans. We will be back next week. A lot of our team, of course, is going to be in New York City for those FinTech Awards and the Future of Crypto Conference. Again, check out the Benzinga Events website if you haven't seen it already. It's going to be a fantastic two-day conference covering everything in FinTech and, of course, the crazy cryptocurrency world we've seen so far this year. But we will be back nevertheless next Friday. We'll have a substitute team in. The team will be going strong with another full show and more companies coming to you live. In the meantime, check out benzinga.com, stay up to date on the news, and we'll see you all next week.